Can everybody see my screen?
Yes, I can see your screen.
Yeah.
All right. So welcome to today's session on market structure. We previously had a session on support and resistance, and when we are talking about support and resistance, I made mention of trends also. So today we will be diving into what we call market structure. And now I want you to understand that market structure is a very important aspect in uh, trading or in the financial market, because I regard market structure as king in the market. As a trader, you need to understand the direction or the directional bias of what where price is heading to. You need to have a narrative, and that is where market structure is brought about. Market structure is just you understanding the narrative of what of price, knowing where price is heading to, knowing the trend of the market. That is just the simple explanation to what market structure is. When we talk about trends, that is when we can say we are bullish or bearish. And when we talk about structure, it entails what's it called, a precise how would I put it, a more precise sequence of how a thing works out or how something works out. So that is what we call market structure. And you can also put it that market structure is just understanding the directional bias of the market. Now, moving on, when we are talking about market structure or we are talking about trends, we have two classification of trends. Actually, we have what we call the bullish trend and the bearish trend. Yeah, the bullish trend and the bearish trend. Please let me quickly type something. We have bullish trend, yeah, which is what's the uptrend, uptrend, and we have the bearish trend, which is the downtrend. Now, these are the two types of trends we have in the financial market. Though we have what we call the ranging or consolidating markets, but that's by the way. So now when we are talking about a bullish trend, what does it mean when our price is bullish or price is in an uptrend? When we are talking about an uptrend, we literally mean when price is in an upward direction, in an upward state, something like this, moving up. Price does not just move up, it has to create series of highs and lows, and this is what we call what an uptrend. Now in an uptrend, we understand that price to uh move in a particular direction, yeah, which is going up. But now in an uptrend, we have what we call higher highs and higher lows, higher highs and higher lows. Now, what does it mean for price to create higher highs and higher lows? Now, you can see that we have the upper parts of the body here. This particular point I'm pointing at, this blue tick, this is called an higher high, while the one we have below is called what? An higher low. the down part of it, of the structure, is called what? Higher low. Now, we for an uptrend to actually continue, price needs to keep creating what? Keep creating series of higher highs. And now for an higher high to be confirmed, which is this part of the structure, it needs to what? To break past the previous high. Now, take for example, when we have these points, when we have something of this nature, and we have this line here, when price is down here, we cannot call this particular point an higher high because it's not greater than this, right? It's not greater than this. We can only call this higher high. This is an higher high. This is an higher high. Why is this called an higher high? Because it broke past the what? The previous higher high, and that is what we call what? Higher high, and that is when we can say price is still in an uptrend. Are we following? Can anybody hear me?
We dey follow, bros.
Okay. Now, and I want you to understand that for a new higher high to be created also, an higher low needs to be created. Where is the higher low? The down part of the structure is called what? The higher low. And that is how price moves. Price moves in a sequence or in a particular series, which is what? Creating series of higher highs, higher low, higher high, higher low, higher high, higher low. And this is what we call what? An uptrend. Everything here is called an uptrend. Yeah, that's called an uptrend. Now, when we are talking about a downtrend, which is what? The bearish trend, that is when we have price moving in such direction. Yeah, when we say downtrend, something is what? Going down. And now in a downtrend, we have series of what? We have series of lower highs and lows. Remember, in an uptrend, we have series of higher highs and higher lows. But in a downtrend, we have series of lower highs and lower lows. What do we call lower lows and what do we classify as lower highs? Now, this upper part of the structure is actually called lower highs, and this part is called lower low. Why is this part called a lower low? It's because it's lower than what? The previous low that we actually have. And now, before we can say a downtrend is continuing, it needs to what? To break below what? The previous lower low. And that is how we confirm if price is still in a what? In a downtrend. So this particular example we have here is what? A downtrend. Sorry, I was supposed to label everything, higher highs and lows, whatever. But by doing that, I would actually exhaust more time. So quickly, as we proceed, we have what we call the consolidating market or ranging market. Now, when we talk about a ranging market, it just actually means that price is not in an uptrend, neither is it in a what? In a downtrend. Price is literally at a phase. It is static. It's just at a point. You can see that this we have is not what? It's not creating any higher highs. It's not creating any lows. It's just at a what? At a point. Just in a point like this. Yeah. And this is what we call a range or consolidating market. But now when we have price creating series of lower highs and lower lows, we can say price is in a what? Downtrend, which we have here. Now, when we are talking about an uptrend, we just expect price to what? To create series of what? Higher highs and higher lows. And that is how it works. And now we know that price does not just move what? It does not just move it does not just go up and down, up and down. In inside the price action, just as you can see here, you can see that the price is not as smooth as the infographics I'm providing. Now, when we have price movements, price literally move in such a way like this. Probably we have something like this. Price come down. Inside of this, it will create some movements, come down before what's breaking past this, right? To break past this, to go up. Yeah, just shaky movement. It's not like very, very straight and accurate as this. And now in an uptrend, we have what we call break of structure. There's what we call break of structure. Now, if price is in an uptrend and we are moving such like this, and price is doing something like this. Now, this is what? This is my higher high, right? This point is my higher high. And now, before we can continue, if price is still in an uptrend, we need to what? To break past this what? This higher high. And now, when we have price break past this higher high, then we can call this what? Break of what? Break of structure. We actually term it as what? BOS. Break of structure. Very simple as that. And that is how price will come back. We have a test. Then we what? We have price coming to what? To take out this higher high again. And we can see we have another what? Another break of structure. And the uptrend continues. Then we have something like this. Now, if we have something of this nature and price keeps creating series of higher highs and lows, you know, price won't just actually be printing series of higher highs and higher lows. Price won't be bullish forever. We need to have some balanced movement. So let's take, for example, we have something like this, and price came down aggressively to what? To break past the previous higher low at this point. You know, it's not supposed to what? To break down past this what? This higher low. Now, when we have price movements and price came downward to break the previous what? The previous higher low that was created, then does something like this, then we can say what? We have changed our movement into a downtrend, because at this point, look at what happened. Price break past the higher low, which is not supposed to what? To do, which means the uptrend is now what? Invalidated. Then price created what? Lower high here. Because why is it called a lower high? It's because the high was not greater than what? This previous high. If that it was greater than this previous high, we can say we have what? A new higher high. Something of this nature. If that we have price break past this stuff, then we can say what? We have an higher high. Then price can just do something like this, come back into this point and continue its movements. Yeah. But now when we have price does something of this nature, then we can say we are planning to what? To change into a downtrend. Then we can have price creating series of what? Lower highs and what? Lows. Very simple and accurate. Then we can say we have what? This is lower low, lower low, lower low. Now, when price breaks this point, we can say we have what? A break of structure to the downside. Now, when price breaks structure in an uptrend, we say we have a break of structure to the what? To the upside, continuing the uptrend. But now we have a break of structure to the downside, which means we are now moving from what? A bullish state to a bearish state. Now we can call this what? Break of structure. We can call these points a break of structure. Yeah, we can call this point a what? A break of structure. Yeah, this point is a break of structure. And that is what we call market structure. Just knowing what? The directional bias of the market. Now, let's take, for example, at this point, what can you see? Price is in a what? An uptrend. And now referring to the last topic we had, which is support and resistance, we talked about trend line support and resistance. Now you can see that we have what we call trend line support and resistance here. You can see price is touching on the resistance multiple times, and price was touching the support multiple times. And after price broke through what? The support at this point, you can see that the support flipped into what? Resistance. But now we are talking about market structure. Now, in market structure, you know, we said in an uptrend, we have series of what? Higher highs and higher lows. Higher highs and higher lows. Now, where or what can we classify as higher highs and higher lows? Look at this point. You can see that this price was still in a downtrend here. You can call this what? Lower high, lower low. Now, look at it. Look at this point now. Price actually, this high that was created was greater than this point here. Now, which means we have an higher high. Now, look at it. Higher high, higher low. Price broke past this. We have a break of structure, forming a new higher high at this point. Then we have what we call higher low at this point. higher high, higher low, and that is how price continues its movement. See what happened here. After the higher low was created here, we have higher high here, higher low, higher high, higher low, higher high. Now see what happened. If the uptrend should actually wants to continue, what do? We are expecting that when price comes to this point, probably retesting this point, we are expecting that if the uptrend will actually continue, this high here will actually break past this high. But no, it did not. It did not. Price just came down and broke past this point. See, and the high that was created was not higher than this. So we can say we are now what? We now moved from what? A bullish state, which is this state. This is a bullish state here, bullish structure here. We now moved into what? A bearish what? Price movement, bearish price action. Can you see it? And now inside of this, we have series of what? Lower highs and lows. Now look at this. This is a lower high. Price broke past this low that we have here. We form a new lower low. Lower high, because it did not break past this high, it's called a lower high. Look at a lower low that was formed. We have a lower high, right? The low was formed. Lower high, lower low, lower high, lower low. And that is how it continues. Now, at this point, see what was going on. We changed into what? A bullish state to some extent here. Look at it. Can you see that? Now, if you want to talk on this, what would we say? Look at this point. Let me explain something to you. This is what? This is a lower high. This is a lower low, right? And now, if the downtrend wants to continue, you are supposed to create a lower high at this point. Then this low would be what? Lower than this previous low. But no, price did not break past the previous low. It just broke past what? The previous lower high. Now we have what? Higher high, higher low, higher high, higher low, higher high, higher low, right? Then we have what? Higher high, higher low, higher high. Now what are we expecting? Price to come down, create is what? Higher low, and what? Continue is bullish trend if the trend will actually continue. So that is everything on what? On market structure, on what we call, this is just a basic form of market structure. Yeah, we call this basic trending. Yeah, so it's as easy as that. So this is where I'll be rounding up today's episode, and I would want to entertain questions at this point.